Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
Hey, this is your host, Greg Myers, and before we jump into episode 134, I wanted to let you know about a few upcoming special opportunities. February is the Pulse of Payments month, where we dedicate multiple episodes to a specific payments or fintech topic. And March is Diversity and Inclusion Month. You can reach me at greg@leadersinpayments.com if you're interested in being on the show or sponsoring during these special opportunities. And now on to episode 134. A self-proclaimed technology entrepreneur and intrapreneur, CoreChain CEO Chris Aguas is our special guest on this episode, and I'm your host, Greg Myers. Chris has had a fascinating career in the payments industry. Originally from Southern California, Chris graduated from Stanford Business School with a passion for driving change. CoreChain is an embedded B2B payments network that facilitates B2B payments and supply chain financing using enterprise distributed ledger technology, which, as many of you know, is the foundational component for blockchain. The only caveat, while blockchain technology facilitates the transaction capabilities necessary for Bitcoin, what CoreChain uses is a bit different. Bitcoin runs on permissionless blockchain, meaning no identifiers or validators are required. CoreChain, on the other hand, utilizes a permission-based network that requires both identification and validation of all players involved. And according to Chris, this is the wave of the future for fintech. We've got a great episode ahead, so let's get started. Hi, Chris. Thank you for being here, and welcome to the Leaders in Payments podcast.
Greg, thank you so much for having me. I appreciate you taking the time.
Absolutely. So let's dive right in. Tell our audience a little bit about yourself. We'll go deeper into your professional background in a minute, but maybe a little bit about where you grew up, where you went to school, where you currently live, a few things like that.
Absolutely. I was born and raised in Southern California. Spent the majority of the first part of my life in California, ended up going from Southern to Northern California for school, went to Stanford for undergrad, returned after a couple years for my MBA, and proceeded to spend the next 10 years or so in and around the San Francisco Bay Area prior to relocating to Fairfield County, Connecticut, which is where we've been for the past 15 years or so.
Awesome. Well, let's dive into the discussion around the company CoreChain. Tell the audience what CoreChain does.
Sure. So, Greg, we are an embedded business-to-business payments network that's actually built on enterprise distributed ledger technology, which is the foundational component of blockchain.
And you used the term enterprise before you described it. What does that specifically mean?
That's a great question. So there are really two different flavors of blockchain technology that have been widely adopted across the globe as of today. The blockchain flavor that most people are familiar with, and it's what Bitcoin and Ethereum and most of the other coin offerings are built on, is what's known as permissionless blockchain. Enterprise blockchain, however, is the exact opposite. Enterprise blockchain requires that nodes and participants on the network identify themselves and that their identity be validated by the network operator. And that allows us to address two of the most common challenges of permissionless blockchain being adopted for commercial use, especially around things like payments. The first is the notion of privacy of data. So in a permission network, only the nodes that are participating in a particular transaction know about that transaction and have a copy of it on the node themselves. So if I am exchanging a payment, for example, between a buyer and a supplier, the nodes that support the buyer and the node that supports the supplier are going to have a copy of that transaction, but no one else will unless they grant permission to view that transaction to a third party, maybe a lender that's participating on either the buyer or the supplier side, or an auditor or regulator. But otherwise, only the nodes that participate in that particular transaction have a copy of it. Of course, it's encrypted, so only the counterparties can view it. The second thing that does is it dramatically increases throughput on the network. I'm sure we've all seen with permissionless networks like blockchain and Ethereum, concerns about transaction latency because of the fact that in many cases, a transaction has to be written to all or at least a majority of the nodes on the network before it will be accepted as true. In our case, because it's only written to the two counterparty nodes, transactions can be processed much more quickly. And the flavor of enterprise blockchain that we use at CoreChain, it's a platform called Corda from the software company R3 based in New York and London. Their benchmarks indicate that we should be able to get about 20,000 transactions per second across our multi-node network.
Wow.
So that's really the difference between the two dominant flavors of blockchain that we see in widespread use today.
Okay. Yeah. Thanks for explaining that. So who exactly are your target customers?
What we're fundamentally trying to do is make business-to-business payments initially here in North America easy button easy. Because as anybody who's familiar with how B2B payments in North America work with a reliance on manual processes, paper checks and whatnot, knows that it's very much broken. So the customers that we're going to are buyers and suppliers, but specifically we get to them through channel partners that they're already using to run some aspect of their business. So, for example, our channel partners are ERP systems, accounting systems, procurement automation systems, and business-to-business marketplaces that have already done the hard work of aggregating large numbers of buyers and suppliers onto their platforms. And where they're enabling some significant portion of the commerce transaction lifecycle already between those buyers and suppliers, but they're not yet providing payments and financing as part of their services. So we go to market as a B2B2B play to these channel partners and enable them to embed our services deeply in a white label basis into their existing platforms and basically turn on payments and financing services and the revenue that's associated with them for their existing networks of buyers and suppliers.
So you don't necessarily go direct to the customer. You go through a channel partner in most cases.
That's right. So our entire strategy is predicated on the notion that there are hundreds of these B2B marketplaces, software platforms, ERP platforms that are in a right position to help their existing buyers and suppliers manage payments and financing, but they don't have the scale to do it themselves. So instead of building a payments and financing business from the ground up, we partner with them and enable them to come to market that way. It's actually very similar to the growth strategy that Stripe pursued in their earliest years. So when Stripe came to market, they initially approached the first generation of person-to-person marketplaces, the Ubers, for example, and provided them with all of the financial plumbing that they would need to operate their marketplaces. We're doing something similar, but specifically focused on these B2B marketplaces and platforms that don't have payments and financing built in yet, but want to get into the business.
Okay. Is it a SaaS model or is it a per transaction fee? How is the pricing and revenue model?
That's a great question. So today we're both. Today we collect and share both SaaS and transaction fees back with our channel partners. But over time, this will be primarily a transaction fee-based business through a combination of discounts as well as per item fees and maybe a little bit of SaaS revenue to top it off. But the majority of it will be transactional.
You mentioned North America today. Are there plans to move more global in the future?
We likely will move globally, but we have a very unique situation here in North America that makes the market so attractive to what we're trying to do at CoreChain. The first is it's a huge market. So based on our estimates, there were about $40 trillion in buyer to supplier payments in North America in 2020. And if you think about monetizing $40 trillion at, say, 50 basis points blended average for payments and financing, that translates into an over $200 billion total addressable market. So it's absolutely huge. But the second is we continue to operate in a world where manual intermediated processes and paper checks continue to dominate as the form of payment for business-to-business payments. And that's really unique to North America. most of the rest of the world has gone to much more efficient electronic means of payments, but we're still living here in North America on the B2B side in a world of manual processes and paper checks, which is a surprise to a lot of people because on the consumer side of the house here in North America, the payments industry has really done a phenomenal job over the course of the last 20 years in displacing manual processes and paper checks. But that transition hasn't happened yet on the business to business side. And we think that our unique approach of partnering with channel partners to solve these problems is the way that we'll finally break through the market in North America in a way that none of the other players have.
Okay. And you mentioned the word financing a couple of times, and I did read on your website about supply chain finance. So maybe can you talk a little bit about that product and what the offering is there?
Absolutely. So we actually view payments and supply chain finance as really the same thing. What differentiates them is the time value of money. And I'll give you an example of what I mean. I mentioned earlier that we have broken payment processes for B2B payments in North America that are time consuming for money and data about that money to transit from a buyer to supplier. We also have a custom in North America of trade terms. So I, as a supplier, might deliver goods and services to my buyer today. I might follow that up with an invoice tomorrow. They might ingest that invoice into their ERP system, route it for approvals, and basically get it in shape to be paid, say within another day or two, but it doesn't get paid. Instead, it goes into the aging queue in the ERP system to await trade terms, which may be 30, 60, 90, sometimes even 120 days later than I delivered the goods or the services. So as the supplier, my working capital is tied up in that approved but unpaid invoice. So what we're doing at CoreChain is because our channel partners are either the ERP system or the system of record in many cases, we can actually see that the buyer has ingested and approved an invoice and is ready to pay it on a scheduled payment date at some point in the future. With that knowledge, we can enable a third-party lender, and we're not a balance sheet lender ourselves. We are a payments and information platform. But for folks that are in the risk business, we can enable a lender to make a very intelligent and much lower risk than traditional factoring decision to advance funds to that supplier at a discount and then collect payment in full when the buyer pays that invoice ultimately in accordance with its terms. It's what's known colloquially in the trade as supplier side supply chain finance.
How big is that part of your business compared to payments?
We've launched the payments piece of our business now. We launched actually our first transaction processing in September of last year. To date, we've processed almost $750 million in cumulative payments to date. We haven't started the supply chain finance aspect yet. As I mentioned, we will be launching that with financing partners that are doing the underwriting and taking the risk. And we'll launch both buyer and supplier side supply chain financing in the first half of 2022.
Okay. And how big is the company?
Right now, we're a total of 9 folks. We're just about 2.5 years old, based very happily in New Haven, Connecticut, which is not necessarily the most sought after entrepreneurial environment, but it really has been a fantastic nurturing environment for us and for our company. And it's also conveniently 2 hours equidistant to Boston Back Bay or Grand Central Terminal in New York City.
Nice. I don't know if we talked about this offline or I read it on your website, but you have taken in some investment money, right?
We have. Since we started the company about 2.5 years ago, we've raised just under $1.5 million in funding. We closed our $1.25 million pre-seed round earlier this year in 2022. And actually, we're just getting back out into the marketplace now for our seed round financing, which we'll be looking to close early in 2022.
What would you say? I mean, there's a lot of players in this B2B space, but what would you say differentiates your company from those other competitors out there?
So that's a great question. And there are really 3 things. You're right. There are a lot of players, particularly in North America, around both B2B payments and supply chain finance. So on the supply chain finance side, we see large names like C2FO and Fundbox and Thalia that are trying to crack the situation that I just described of helping suppliers unlock working capital. And then we see a different group of players that are trying to build B2B payments networks. These are folks like Bottom Line Technologies, which operates the Paymodex B2B payments network, and AvidXchange, a newly public company that operates the AvidPay network. What's unique about what we're doing at CoreChain is we're combining both of those aspects, the supply chain finance aspect and the B2B payments aspect, into a single holistic solution. And really the only other player in the space that does that today is AvidXchange, the company I just mentioned that is newly public on the NASDAQ. And we have a lot of respect for AvidXchange, their CEO, Mike Prager, and their organization. They're a fantastic company. But we do differentiate from them in a couple of key ways. First of all, we are built from the bottom up for our channel partners. So we provide our services on a white label basis and deeply embed them within our partners' existing surfaces. Literally, where these buyers and suppliers are already transacting key aspects of their business, we embed buttons and controls that enable payments and financing literally at the click of a button. So it really cuts down on the implementation barriers and drives rapid adoption. The second is that we're built on distributed ledger technology or enterprise blockchain, which we think does a couple key things for us. First, blockchain is inherently a network computing architecture. And with our go-to-market approach with our channel partners, essentially what we're doing is by embedding our Porta blockchain nodes in each of our channel partners and then connecting those nodes, we're building a very large network of networks that we think over time will allow us to pretty rapidly grow to hundreds of thousands, if not millions of buyers participating in our network and tens of millions of suppliers. That will make us a much larger trust network than any of the other B2B payments networks that are in the marketplace today. And that's enabled because of the network architecture of blockchain itself. The second thing that it will enable us to do is not today or tomorrow, but in 3 to 5 years, say, we anticipate that blockchain-based digital assets, things like regulated stablecoins, for example, or central bank issued digital currencies, will become a much more prominent means of value exchange for all payments, and in particular, B2B payments. So when that transition happens, because of the fact that we are on a native blockchain architecture ourselves, or built on a native blockchain architecture ourselves, we'll be able to directly facilitate that value exchange between buyers and suppliers using digital assets without having to deal with intermediaries. And that'll reduce costs and help unlock working capital even further for suppliers.
You've already answered part of this question with what you just said around the future being around the blockchain and different payment types through the distributed ledger and those types of things. But where else do you see the B2B payments industry heading over the next 3 to 5 years?
In addition to the greater adoption of distributed ledger technology, we think that the nature of financial services around payments is likely to change, and that the business will become less about the actual transmission of money or value between and among trade counterparties and more about data and information. Once trade counterparties have access to their own digital assets, they can route it directly to their payees if they're a buyer, for example, without having to use the traditional financial system intermediaries to move the value. But where those players then add value is in providing data and information about those counterparties to each other to enable a transaction. Things like identity information, reconciliation information, the supply chain finance lending opportunity I mentioned earlier against approved but unpaid invoices. So financial technology has always been about data, but the pricing model has been based more around movement of money. We think that that will be a less prominent piece, and the economic model in fintech will be much more around direct data provisioning by and among trade counterparties.
Any other predictions of the future in the space?
We think that within 3 to 5 years, the notion that digital assets will be in widespread use will come to pass. But I want to emphasize again that our expectation is not that we're talking about permissionless, ungoverned digital currencies like Bitcoin. Instead, what we anticipate is digital assets, in particular stable coins that are tied to a fiat currency like the US dollar and regulated by some assortment of the existing regulatory scheme, probably similar to how mutual funds are regulated today because they perform a similar function of storing notional value that is tied directly to a fiat currency. So we think that large players in financial services today, the large treasury banks, other emerging players, folks like Gemini and Circle that have been in and around the space and in many cases are applying for banking licenses themselves, we think that these digital assets will be in the form of regulated stablecoins as opposed to the unregulated, more rogue types of currencies that have attracted everybody's attention today.
Sure. Do you think that we ever get to the point in this country where those Bitcoins, and I don't know if we'll ever get to where unregulated coins are used, but do you think there's a place way out in the future where it's a little less regulated?
I think the answer to that is going to depend a lot on what happens here in the U.S. over the course of the next couple of years with those existing currencies, in particular Bitcoin, how the market evolves and how stable or unstable it proves to be in light of potential abuses and bad actors. If collectively the Bitcoin community is able to keep bad actors and fraudsters largely at bay, I think that there will likely be less regulation. If we start hearing about widows and orphans losing their life savings on Bitcoin-related frauds or similar issues, I think we can anticipate a lot more regulation, particularly given the change in stance in Washington around a much stronger degree of regulation of consumer financial services.
Yeah, I would agree. Let's switch gears a little bit and talk about you. Let's talk about your professional background. You mentioned Stanford, but let's walk through from that point in time how you moved through your career progression and became the CEO there.
Absolutely. I am essentially a technology entrepreneur and intrapreneur at heart. So I have spent my career building and leading teams that in turn have built and launched innovative technology products with a particular focus on payments and especially business to business, B2B payments, but also adjacent areas like enterprise software and software as a service. So I've had the good fortune during my career to really run the entire span of companies from early stage startups where I've been a founder or a principal, and CoreChain is actually my third raw startup. But I've also been part of the leadership teams, venture and private equity backed companies, and even spent 8 years combined at first Visa and then MasterCard in product development roles specifically focused on business to business payments, commercial payments, and related areas around the globe, especially at MasterCard.
Okay. And is your passion around the more entrepreneurial side, or do you just feel like they're both good, but they're just different? Because thinking MasterCard Visa versus startup is quite a dichotomy.
It's been very interesting in particular to see how both of those organizations have evolved over the course of the last now almost 15 years. MasterCard has been a public company, followed shortly after its IPO by Visa. As member-owned associations, not specifically focused on generating profits, but nonetheless very profitable, there was a certain risk profile that both organizations adopted. And it's been interesting to see how that's evolved over time. So when I joined MasterCard, for example, in 2007, right before our IPO, we had a pretty significant global share deficit in transaction volume relative to Visa. And part of our storyline to our banks that were selling us off, as well as to Wall Street, was that since we were smaller, we were hungrier and we try harder. If you remember the old Avis tagline, we're number two, so we try harder. And that was very much the environment that we had at MasterCard in that time. It was a very, very innovative and risk-seeking organization. And it was through some of those risks that they've been able to see some of the phenomenal growth that they have in everything from their top line to their bottom line to their stock price over the course of the last 15 years. But I'd say now that both MasterCard and Visa are the large behemoths that they are, that risk tolerance is probably tightening back down. So I think there's a great opportunity, rather than viewing early stage emerging companies like CoreChain as potential competitors, to instead partner with them. And so we certainly look at the large payment networks as well as existing treasury bank organizations as potential partners for us, where we can bring them innovation and new technology, in particular this fast-moving world of blockchain technology, and enable them to continue to do what they do best over time.
Sure, makes sense. So what are some things you're passionate about? So maybe one work-related thing and one personal thing that you have a strong passion for.
That's a great question. From a work perspective, my time in the payments industry over the course of the last 20 years has been really focused on the so-called war on checks. And as I mentioned earlier, as a payments industry, we've done a great job of getting paper and manual processes out of the day-to-day environment for consumers. So if I'm a consumer making a payment to a business, whether it's a retail business or a non-face-to-face business, I have at my fingertips payment cards, payment tools like Zelle and PayPal and Venmo, online banking tools from every bank out there that I can use to make payments electronically. But we haven't seen that chasm crossing yet on the business to business side. So really, I characterize my career as being one of the champions of the war on checks in the business to business environment. And now with CoreChain, I think I finally figured out how to tackle the market in a way that actually drives change and brings benefits to the players in the marketplace.
What about a personal passion?
So, one thing I'm certainly passionate about on the personal side is youth. So spent the better part of the last 10 years as a leader in the Boy Scouts of America organization, in particular with scouting units right here locally in Connecticut. And it's been a great experience to watch these young men, and now women, of course, are also invited to be part of the Boy Scouts of America over the course of the last several years. But it's been great to see these young men grow up and evolve, learn the values of scouting, the values of hard work, spirituality, and commitment to community, and see how that has impacted them as they've gone off to college and in many cases now are post-college into the working world and having families of their own. It's been very rewarding for me personally to see that growth and be able to help contribute to the next generation.
Okay, that's a good segue into the final question. What advice would you give someone coming right out of college that wants to get involved in the payments, or if you want to broaden it to the fintech space, what advice would you give them coming out of school to help them be successful in their careers?
So my advice, if you're interested in this segment, particularly if you harbor entrepreneurial visions, go get a real job first. Go join one of the big players, one of the payment networks or one of the larger, well-established fintech organizations, or even one of the treasury banks, and learn how the business works. Learn how the technology works, how the regulatory schemes impact that technology, and where the real issues lie in terms of unmet customer needs. And once you've spent, probably not necessarily a ton of time, but once you've spent years in that space, I think then if you harbor those same type of entrepreneurial ambitions, that's the time to then perhaps go out on your own and try to do a startup or join a very young company. But get some grounding and some learnings from some of the big players in the space first before you do that would be my advice.
Yeah, that's great advice. Well, Chris, we've covered a lot about the company, you and your journey, and then the future of where you think B2B payments is heading. Is there anything else you wanted to add before we wrap up?
Really only that I appreciate the opportunity to chat with you and your audience. And since we're recording this right here in December of 2021 with the holidays right at bay, take the opportunity to wish you and all of your audience a very happy holidays, and here's to a great 2022.
Yeah, happy holidays to you as well. So, Chris, thank you so much for being here. I know your time is very valuable, so I really appreciate you being on the show today.
Thank you so much. Have a great 2022 yourself.
You too. And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.